That brings to this idea of thinking about stakeholders, thinking about community. And asset managers often are conflicted when their client investors demand performance. How would you deal with that?
Well, I'm going to end on this point, and if you will, and when you're an investment advisor, an institutional investment advisor, and you walk into a client, you know what you are capable of delivering, what your process looks like, and what kind of returns you can reasonably expect to deliver for the client, relative or absolute. And then, if you have a productive meeting with a client, you interview them as equally as they interview you about what their expectations and needs are. And then the successful relationship where you as a financial services firm or individual can add value over time to that client exists when the needs and expectations of the client are aligned with your capabilities. Then you have a match made in heaven, and you can actually point to success over time. The same is true of finance in society. And that's where this concept of enlightened finance and the big ideas in the book, and the last half of the book is really the big idea portion, is that until and unless we have alignment between what society wants and what finance is delivering, we're not going to have finance be a force for good. We're going to have a disconnect. And what happened, I think, in the financial crisis is it was kind of a dividing line. What we thought we wanted from capitalism, which was growth at any at all costs, even if it comes leveraging up the world's balance sheets, running up deficits in public finances, whatever. We want growth at any at all costs. Whoops, that's not what we want anymore. Well, what is it that we want? And right now, there's a conversation going on about what do we want from capitalism. Why is that important? Because until we know that, finance can't enable that. Finance is an enabler of economic capitalism. So what do you want from capitalism? Do you want growth at any and all costs? No, we don't want that. We saw what happened. Well, what is it? So David Brooks uses the word social capitalism, wrote a column about growth balanced with other things. Mark Carney, the governor of the Bank of England, uses the word inclusive capitalism, growth balanced with other things. John Rogers, fiduciary capitalism. David Blood, sustainable capitalism. John Fullerton, regenerative capitalism. These are all modifiers put in front of the word capitalism to try to start talking about what we want from the economic system and therefore what the financial system needs to do. And the shortest answer I can give you today, after participating in the Future of Finance initiative, talking to all these smart people, is that we no longer want growth for growth's sake. We want growth balanced with stability, which has implications for how we regulate the financial system. We want growth balanced with sustainability. We want growth balanced with generational equity, and we want growth balanced with inclusiveness, not generating huge disparities in wealth. We want growth, in other words, in the service of other social goals. Growth always, because without growth there's nothing, but growth in the service of and beside and in support of other goals. Once we get that straight, then we can start drawing a diagram for what the financial sector ought to work like and look like in support of social, inclusive, fiduciary capitalism and growth balanced with other things. And I think this is an exciting time in the history of our industry, and I'm happy to take questions on the sublime or the particular, wherever you want to go.